Good morning, it's Monday the 11th of April and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. So, as always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the biggest stories straight afterwards. So, let's get to it. So let's take a look at the economic numbers being issued this week. And today we'll get an update on how inflation is faring in China, and an update on GDP here in the UK. Tuesday brings an update on the employment situation here in the UK. And that's something we'll talk about in more detail straight afterwards. Also on Tuesday, we'll hear the ZEW German economic sentiment. And with inflation long past the oft-quoted transient stage, we'll also get to hear how CPI is faring over in the US. And that's also something that we'll discuss in more detail straight after this. Similarly, on Wednesday, it's the UK's turn to reveal how our CPI is faring. And likewise, we'll be discussing that afterwards. We'll also discuss the Bank of Canada's latest interest rate decision, due also on Wednesday, as Canada's economy suffers similarly with inflationary woes. Wednesday also brings a similar decision due from the Royal Bank of New Zealand, and we'll hear the latest PPIs over in the US. And on Thursday, it's the turn of the European Central Bank, and we'll also take a look at this in more detail afterwards. Thursday also brings updates on the employment situation in Australia, US retail sales, the jobless claims in the US, and the Michigan consumer sentiment. And finally on Friday, the US industrial production numbers. And the companies that we'll hear updates from this week are as follows. On Tuesday, we'll hear from EasyJet, ASOS, Deliveroo, and JD Sports. On Wednesday, retailer TESCO released their full-year results, which we'll discuss in more detail in a moment, and JP Morgan Chase. And finally on Thursday, it's the turn of Dunelm, Hayes, Citigroup, Goldman Sachs, and Wells Fargo. Well, last week was a rather quiet week, but things will start to ramp up again this week with 3 central bank meetings and inflation data from both the UK and the US. France will also hold the first round of its presidential elections on Sunday, although the main event actually isn't until Sunday the 24th of April. US earnings season will also kick off, meaning investors have plenty to focus on, in addition to any developments in the Eastern European conflict. So without further ado, let's take a look at some of this week's big stories. Well, on Tuesday, we'll get an update on the unemployment situation here in the UK. Now, UK jobs data will be watched closely, as it could provide further clues as to how the jobs market is holding up, how wage growth is faring, and shed light on the likelihood of a rate hike by the Bank of England. Unemployment is expected to tick lower to 3.8%, down from 3.9%, taking it back to pre-pandemic levels. Wage growth was 4.8% in January and is expected to keep rising. Even so, this is still well short of the level of inflation, highlighting the squeeze on household incomes. Strong wage growth could help support the odds of another rate hike at the Bank of England. Also on Tuesday, an update on the Consumer Price Index over in the US. In February, CPI surged to 7.9%, a 40-year high, and with PPI inflation running at 10%, consumer prices are likely to rise higher. Fuel prices have increased as oil prices jumped once the Ukraine conflict started. Food prices have also been pushed higher. The Fed raised interest rates for the first time since 2018 in the March meeting. Since then, policymakers have adopted an even more hawkish stance, with the market pricing in an 80% probability of a 50 basis point rate hike in May, in an attempt to tame surging inflation. Hotter than forecast, CPI could cement the half of a percent hike, lifting the US dollar even higher. The US dollar index reached 100.00 last week for the first time in 2 years. Wednesday, it's the UK's turn to release CPI data. Well, unsurprisingly, UK consumer prices are expected to have risen again in March after rising to a 30-year high in February of 6.2%. And this was a significant jump from 5.5% in January. Amidst the surge in energy prices from the fallout from the Eastern European conflict, inflation could push towards double digits by the start of the second half of the year. UK CPI is expected to rise to 7% in March and could prompt the Bank of England to hike interest rates again in May, which would mark the fourth straight meeting where interest rates were indeed lifted. That said, the Bank of England is starting to sound increasingly concerned over its ability to hike rates to rein in inflation without tipping the UK into recession. These fears have sent the pound to its lowest level versus the US dollar since November 2021. Wednesday also brings the latest interest rate decision from the Bank of Canada. Well, in the last meeting, the Bank of Canada raised interest rates for the first time since October 2018 and did so by 25 basis points. Since then, inflation has ticked higher to 5.7% year-on-year in February, its highest level since August 2018. And the jobs data remains strong, with 72,000 jobs added in March. The big question is not if the bank will raise interest rates, but how bold will it be? Will the central bank hike rates by 50 basis points, knowing that there is a very high probability that the Fed will raise rates by 50 basis points at the May meeting? The other area to watch will be the balance sheet. Will the Bank of Canada begin to trim its bond holdings? So, as a result, do keep an eye on the Canadian dollar. And US bank earnings season kicks off on the 13th of April with JP Morgan. Expectations are for a sharp decline in earnings compared to a year earlier, when deal-making and trading were unusually strong and bad loan reserves were being released. Investment banking has stalled since the start of the Eastern European conflict. The focus will be more on net interest income, as interest rates are expected to ramp up fairly quickly over the coming months. Costs will be in focus, in addition to exposure to Russia. And to wrap up a busy midweek, TESCO is due to release full-year results on Wednesday, against a backdrop of a share price that's been steadily rising after dropping to a four-year low in February this year. Q3 trading revealed strong sales growth, promoting the retailer to raise its guidance. Full-year retail operating to exceed £2.5 to £2.6 billion guided. TESCO has also increased its market share to 27.9%, up from 27.3% in the 19 weeks to January the 8th. TESCO like-for-like sales were up 2.4% compared to a year earlier, which is impressive considering the tough comparatives. Meanwhile, the wholesale subsidiary Booker has stood out as an outperformer, with sales up 17.5% over the same period. Costs will be a crucial area in the full-year report, given rising food inflation. However, the worst is yet to come. Wages will also be under the spotlight after TESCO announced a 5.5% pay increase, alongside 2,500 job cuts. And finally, on Thursday, the European Central Bank is due to release its latest interest rate decision. The March European Central Bank rate meeting minutes showed that some governing council members were starting to show concerns over inflation levels. The ECB signalled that the tapering of its asset purchase programme would end in Q3 and took out any reference to interest rates falling from the current level, opening the door to a rate hike this year while also keeping options open. The ECB meeting comes as inflation in the region hit a record high of 7.5% year-on-year in March, and that's up from 5.9% in February. Meanwhile, PPI is running at 41%, suggesting that CPI isn't anywhere near slowing down. The ECB is still tapering. Rate hikes are still a few quarters away. The euro-dollar pairing trades towards its lowest level this year. So, those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from ITV. And in the FTSE 250, we'll hear from Unite Group, Vesuvius, Ibstock, and BMO Commercial Property Trust. So there you have the highlights coming up this week. As always, thanks for watching, and don't forget to click on that subscribe button to make sure you don't miss out on any of our regular videos. Also, as always, a reminder that if you haven't already downloaded the app, why not give it a try to make sure that you receive all the latest up-to-date financial news and, of course, our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.